Hello, everyone. Thank you so much again for joining us for our weekly wrap up. My name is Jeremy Cronemeyer. I'm Operations Manager for Wickham Financial Group. I also have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners being on the call. We saw some U.S. labor market numbers still showing some good strength, even though the employment rate was easing a bit. Did reveal some signs that we may be seeing or getting a little closer to some rate cuts that might come out this summer. But we saw the S&P index fell marginally. The Nasdaq Composite dropped about 1%. The Russell 2000 small cap off about 0.5%. So we saw 8 of the 11 sectors in positive for the S&P index. We saw about a 3% gain in some interest rate sensitive areas like utilities. We saw basic materials at about 1.5% on a pretty good surge in gold and copper. And actually, we saw gold jump about 4% to reach its new all-time high of about 2,200 per ounce. We did see on the other side, crude oil backed off about 2%. If we go to the crypto side, we saw Bitcoin continue to stage some really strong rallies here up to about 70,000. That's 64% return so far in 2024. If we go over to some economic numbers, start looking at that unemployment rate a little bit more, like I alluded to at the very beginning, we saw the unemployment rate tick up. Now that's to about 3.9 for 3.7. But keep in mind, we want to see unemployment moving up a little to hopefully bring demand for goods and services down and bring inflation down. So we want to see it tick up a little bit, but in some reasonable areas, and that's what we're seeing. We also saw some wage growth cooling a bit to 4.3% from 4.5 year over year. That's very good because that tends to be pretty sticky in terms of inflation. We did see overall just the labor market softening, again, boosting some odds or maybe some thought that maybe June could still be on the table for the Federal Reserve. We even did see Federal Chairman Powell come out in his congressional testimony and basically say, listen, they can and will begin this year cutting rates. Now, how much, how fast, that's really the question mark. Again, they have a mandate around 2%, so we need to see that progress moving towards that area for them to feel much more confident about increasing their rate cuts. And some other economic news, we saw U.S. service sector continue to expand in February. Prices paid and the employment both fell, keeping unit labor costs pretty much in check. We did see the consumer credit rebound in January, steady while lowering its inflation and growth targets. Excuse me, that's overseas. When we go over to Europe, overseas, we did see the European Central Bank hold interest rates pretty steady and they lower their inflation and growth targets. We go over to the Bank of Canada. They kind of struck a little bit different tone here. They're still saying it's probably a little bit too early to be easing policy. So they're waiting to see the whites of the eyes of that inflation continue to come down and continue to see a bit of a struggle over in China. I think they put out some 2024 growth targets. I think the market's pretty skeptical in this, but I think they were saying around 5%. But we're still seeing some economic challenges over there. So we'll have to see how that all shakes out with their projected target. If we look at this week, I think it's really around economic news. We're looking at CPI numbers coming out. We'll be looking at the core inflation. What are we looking at with PPI? And that'll be released on Thursday. And I think we're looking at some expectations have been struck at a kind of a stubbornly high 3% level. That might be kind of where we're at a bit before we can continue to get this shift down, hopefully closer to that 2% target for the Fed. Sure.
Gotcha. Well, I had a question for you, Graham. So you were just talking about the inflation numbers. If those inflation numbers later this week, if those inflation numbers come in a bit higher than expected, how do you think that'll affect the Fed's decisions going forward and maybe the markets as well?
Well, I think the market's already pricing in they're going to lower rates. So I think that's in the cards. How quick, how fast, they could be a little bit disappointing for the market. But so far, the market's been taking this in stride. I think they were expecting a May cut, didn't happen. March, are we going to get it in June? I think the market's moving towards we're going to get it. The Fed says we're going to get it this year. So as long as earnings hold up and we don't see a spike in inflation, I think the markets can deal with that.
Gotcha. Well, we always appreciate the information, and thank you again for everybody joining us. If you've never been on here before, you can go to our website at wickhamservices.com. We got all of our past weekly wrap-ups, our webinars. We got a webinar that's going to be happening to the end of this month, our quarterly webinar. So check us out on the last Wednesday of March for that, and look for something coming out to sign up for that. And again, we always appreciate it, and talk to you soon.
Take care.